Welcome to Eco Wealth Lab, where today we dive deep into the world of registered investment advisors, RIAs, the trusted professionals who can revolutionize how you manage your wealth. In today's complex financial landscape, managing your money isn't just about saving and spending wisely, it's about making informed, strategic decisions that help secure your future. Stick around as we explore how RIAs put your financial interests first, how they differ from other financial advisors, and why they are growing in popularity. What is a registered investment advisor, RIA? A registered investment advisor, RIA, is a professional or firm that provides personalized financial advice to clients, often managing their investments on their behalf. But what sets an RIA apart from other financial professionals is their fiduciary duty, a legal and ethical obligation to act in their clients' best interests at all times. This concept might sound simple, but in the world of financial services, it's a game changer. Unlike brokers, who often work on commission and might be motivated to sell financial products that benefit them more than you, RIAs have a duty to always prioritize your financial well-being. Their advice is objective, tailored, and designed to help you achieve your specific financial goals, from building wealth to planning for retirement or managing tax strategies. Understanding fiduciary duty, why it matters. Fiduciary duty means your RIA is legally obligated to provide advice that's best for you, not for them or anyone else. This duty extends to all financial decisions, including investment strategies, asset allocation, and tax management. RIAs are required to disclose any potential conflicts of interest, such as if they stand to benefit financially from the recommendations they make. This level of transparency is crucial in today's financial landscape, where many consumers are bombarded with conflicting advice from brokers, salespeople, and online platforms. By working with an RIA, you can rest easy knowing that their only priority is growing and protecting your wealth. Let's break this down further. Objectivity: RIAs are required to offer unbiased financial advice. They don't earn commissions from recommending specific financial products, which means their recommendations are purely in your best interest. Client-centered approach: RIAs typically work on a fee-based model. This could be an hourly rate, a flat fee, or a percentage of the assets under management. Since their compensation is directly tied to the value they provide to you, there's no incentive to push risky investments or products you don't need. Transparency: fiduciaries like RIAs are bound to act with full transparency, ensuring that clients understand what's happening with their money, why certain investment strategies are being employed, and what the associated risks are. How RIAs differ from brokers. One common misconception is that brokers and RIAs do the same job. They both help manage money and investments, so what's the big difference? The key difference lies in how they operate and the obligations they have towards their clients. Brokers act as intermediaries who buy and sell securities like stocks, bonds, and mutual funds on behalf of their clients. While they are required to offer suitable investment advice, this doesn't mean they have to act in the client's best interest 100% of the time. Brokers often work on a commission-based model, which means they may be incentivized to sell certain financial products, whether they are the best fit for the client or not. RIAs, on the other hand, are required to meet a much higher standard of care. They operate under a fiduciary standard, meaning they must always act in the best interests of their clients. This structure eliminates many of the conflicts of interest that can arise in the financial world. Think of it this way: a broker might recommend a particular mutual fund because they earn a commission when you invest in it, whereas an RIA would only recommend that fund if it truly aligns with your investment goals and risk tolerance. Why RIAs are gaining popularity. Over the last few years, RIAs have seen tremendous growth. According to the Investment Advisor Association, the number of RIAs has risen steadily, with these professionals now managing over $114 trillion in assets across 61.9 million client accounts. But why are more and more people turning to RIAs for financial advice? Several trends are driving this shift. Increased financial awareness: consumers are becoming more educated about their financial options. Thanks to the internet and social media, people are more aware of the different types of financial advisors and the benefits of working with fiduciaries like RIAs. Complex financial markets: as financial markets become more complex, people need expert advice to navigate the risks and opportunities. With the rise of new asset classes like cryptocurrency, ESG, environmental, social, governance, investments, and alternative investments, the demand for specialized advice has grown exponentially. Transparency and trust. In an era where people are increasingly skeptical of large financial institutions, RIAs offer a transparent, client-first model that resonates with those looking for long-term relationships built on trust. Technology and access. The rise of technology has made it easier for individuals to access professional financial advice. Many RIAs now offer virtual consultations and use sophisticated financial planning software to provide personalized advice, making their services more accessible to a wider audience. The role of technology in RIA growth. Speaking of technology, the use of AI and data analytics in financial services has given RIAs more tools to serve their clients better. For example, some RIAs are using AI to analyze market trends, optimize portfolios, and even predict potential financial risks. AI can also help with tasks like tax planning, retirement forecasting, and real-time investment performance monitoring. Moreover, advancements in fintech are allowing RIAs to automate many of the back-end tasks involved in financial planning. This automation frees up more time for RIAs to focus on their clients and provide more personalized services. Whether it's through digital onboarding, portfolio tracking apps, or real-time market data analysis, technology is allowing RIAs to offer a better client experience at a lower cost. How RIAs help with retirement planning. Retirement planning is one of the most critical services that RIAs provide. Most people want to ensure that they have enough money to live comfortably in retirement, but many don't know where to start. That's where an RIA comes in. When it comes to retirement, an RIA will help you estimate how much you need. An RIA will work with you to estimate how much you'll need in retirement, taking into account factors like your desired lifestyle, healthcare costs, inflation, and how long you expect to live. Set up a retirement savings plan, whether you have a 401k, IRA, or other retirement accounts. An RIA will help you optimize your contributions to take full advantage of tax-deferred growth opportunities. Manage your investments. As you approach retirement, your investment strategy will likely need to change. RIAs help adjust your portfolio to minimize risk while still providing the growth you need to outpace inflation. Plan for tax efficiency. Taxes can significantly affect how much money you get to keep in retirement. RIAs offer tax planning strategies to ensure you pay as little tax as possible while maximizing your income. Create a withdrawal strategy. When it's time to start withdrawing from your retirement accounts, an RIA can help create a strategy that ensures you don't run out of money. They will consider things like Social Security, pension benefits, and required minimum distributions to create a plan tailored to your needs. Navigating financial complexities with RIAs. Let's not forget that an RIA does far more than just investment management. Many people face complex financial situations that require professional guidance. For example, estate planning. Want to leave something for your kids or a favorite charity? RIAs work with estate planning attorneys to ensure your wealth is passed on according to your wishes with minimal tax implications. Education savings. Planning for your children's college education? An RIA can help you navigate 529 plans, Coverdell accounts, and other education savings options to ensure your children get the education they deserve without breaking the bank. Charitable giving. Want to make a lasting impact through charitable donations? RIAs can help structure charitable giving in a tax-efficient way, whether it's through donor-advised funds or creating a charitable remainder trust. DIY versus RIA. Why professional guidance matters. With so many apps, robo-advisors, and online tools, it might be tempting to take a do-it-yourself approach to managing your finances. After all, why pay someone to do something you could do on your own, right? Well, not quite. While DIY investing tools can be helpful, they often lack the personal touch, expertise, and long-term strategy that an RIA brings to the table. An RIA isn't just about picking stocks or funds. It's about taking a holistic view of your finances, understanding your personal goals, and crafting a long-term strategy to achieve them. Moreover, DIY investors often fall prey to common pitfalls like emotional decision-making, market timing, or overreacting to short-term market movements. An RIA provides discipline and guidance to help you avoid these mistakes and stay focused on the big picture. Why you should consider an RIA ***. When it comes to managing your financial future, an RIA offers a personalized, client-first approach that stands above the rest. They are fiduciaries, meaning they have your best interests at heart and are transparent, objective, and aligned with your financial goals. From retirement planning to estate management, tax strategies, and risk mitigation, an RIA helps you navigate the complex world of finance with confidence and clarity. Whether you're an experienced investor or just starting, working with an RIA can help you develop a long-term financial strategy that adapts to your evolving needs. Remember, financial success isn't just about making good decisions today, it's about planning for tomorrow. Invest in your future by partnering with an RIA who can help you build, protect, and grow your wealth in a way that aligns with your values and goals.